Very much. Tax day, of course, is on Sunday. What better way to prepare than to be in the know a little bit? Tax attorney Kevan McLaughlin of the McLaughlin Legal is here to help explain how to avoid triggering a tax audit. But more importantly, thank you for being here, the busiest time of year for you.
It's my pleasure.
All right, so let's get right to it. Avoid certain things to trigger. I mean, when you think about filing your taxes, you're always thinking about what can I do and what I can't do, and most people don't know, so they turn to a guy like you to help me out. So what should we avoid to trigger an audit?
Well, it's a good point you bring up. The first thing I think is to make sure that if you choose to have a return preparer, somebody professionally do your return, make sure they're competent, make sure they're credentialed, make sure they know what they're doing. A problem preparer, either because they make innocent mistakes or are negligent, is one of the first triggers for an audit. It could also be the individual themselves, because certain preparers, whether they want to admit it or not, are known to the IRS, and it would be unfortunate if you were involved with them. So it would be important first to make the right selection choice and choose the right professional.
When you sign that return, speaking of the preparer, it's not the preparer's fault, it's yours, right?
That's precisely right.
And I think people forget that.
You're absolutely right. At the end of the day, the ultimate responsibility is for the taxpayer, for the accuracy of that return.
So he's just there to assist you. All right, let's talk about some of the common things that would trigger an attention, like little red flags. Expensing, for example.
Sure, and certainly some expenses are more scrutinized or much more paid more attention to by the IRS than others. Things like travel, meals and entertainment, unreimbursed employee expenses. Those are valid deductions, but they are often ones that are abused. So higher than average or higher than normal expenses in those certain categories are very likely to raise
What
red
keeps you
flags.
out of trouble there? Because say you're having a business lunch, do you have to write on the receipt? How do you verify what you've been doing?
Well, there are very particular rules depending on what type of transactions they are and what type of expenses they are. So yes, we always advise clients to keep very, very good records, not only documenting the amounts, so whether and when it was paid or incurred, but importantly, the business purpose. And invariably, that becomes the question that is ultimately asked. It's not difficult, in most cases, to prove that the expense was actually paid or incurred, but to prove the why.
Okay.
More important.
How about underreporting expenses?
Underreporting expenses is usually not an issue. Underreporting income
Underreporting anything
is quite problematic.
Yeah.
And one of the biggest, I would say, although it's a common, at least in volume audits, would be underreporting of income based on third-party reporting. W-2s don't match what's reported on the return. 1099s have been issued and they don't match or reconcile to what's on the return. Very easy for the IRS to cross-reference and reconcile what a third party thinks they paid you or you should have been paid versus what's on your return. If those don't match, you could find yourself in an audit.
All right, so things are going to be changing in the future here, because this is for what's in the past. How should you prepare for the future things as the new tax law kicks in?
Sure, as the new tax law comes in, I think that the advice is still always the same, at least so far as protecting yourself in an audit. Make sure you have good records. Continue to maintain contemporaneous records, so if you are small business or self-employed, mileage logs, calendars, etc. Go to a professional. If you choose to have somebody do your returns for you, make sure they're competent, make sure they're good, make sure they know what they're doing, and don't be afraid to ask questions, because as you said, at the end of the day, you are signing the return. You are ultimately responsible for its accuracy. If you don't understand something, ask. If something doesn't make sense, ask. It's your responsibility, and you can ask, and you should follow up with the preparer.
What's the first thing you should do if you get a letter from the IRS saying we're going to audit you?
Right. So if you do get any type of correspondence, and I would admit to most people it comes in something that is not easily identifiable as an audit, you must understand you have certain rights and you have certain responsibilities, and all of those tend to be time sensitive. Engage a professional early and often. I cannot overemphasize the amount of problems and how bad they get with neglect.
Does the IRS give you a phone call and say, hey, you owe us a bunch of money, pay here, if you can avoid it now with a credit card payment?
Almost never. If you ever do get one of these, what we tell clients to do is contact us immediately and we will report it. There's a variety of sources that you can read online. The IRS has a very good website to discuss about these scams and phone call phishings. If you ever get a conversation or a phone call that seems uncommon, I've contacted a tax professional and they can guide you into how to make a report.
All right, Kevan McLaughlin, thanks so much. We'll link to your website here if you need any questions asked or answered about taxes and perhaps triggering an audit. Great to have you here. Thanks so much for the advice.
My pleasure.
Good luck. I know it's a busy season.
Thank you.
All right.